guys. So we're gonna get into this episode, and this is kind of an update on everything that's been brewing, and this will be like one of our emergency broadcast type
episode.
Up-to-date industries. We'll see how this pans out long term.
First of all, I'll just add the caveat and the disclaimer that number one, I am not an attorney, and this is not legal advice, and I am not a legal expert. This is just my interpretation of reading through some of the things happening, and we're going to have a discussion about them. So
yeah, and a lot of what we'll say, we kind of want to give everybody an update on what's going on in the industry, ask some questions why. I mean, we do know that we're getting quite a few people hearing and listening to this podcast, so we would absolutely love the opportunity to have some discussions at a high level with some of our policymakers, politicians, carrier partner friends, chief legal counsels as to what's going on and why. But really,
and I'll be honest with you too, part of the reason that our podcast does very well too is because a lot of these people at carriers or policymakers, they just don't want to like go on the record, so to speak. And a lot of the carriers, they're always so fearful of L&C, legal and compliance. I can't, talk about X, Y, or Z. So we're constantly having sidebar conversations with people, but they just don't want to go on the record.
Correct. Well, not only that, we know that, our two big private equity groups in our industry have some pending litigation that we'll talk about as well too. And so a lot of their affiliates, downlines, entities, they cannot speak to any of the things going on because there's pending litigation going. So we are unshackled for the time being. We're free, independent. We're gonna bring you the real raw updates as we see it. And like Dan said, we're not attorneys, nor do we absolutely know with authority on anything. This is all like Patrick Bet David says on all his supposedly. A lot of this is just like supposed. This is our interpretation as to what's going on. But we wanted to talk about, obviously the behemoth that's hit our industry, the call letter. We've been hearing it from everybody. I was saying last month that I think this year is our industry's version of the 2008 industry financial crisis. And everybody's calling it the Great Medicare Unwinding. There's a lot of stuff going on.
Medicare reset.
And even since then, we've seen a lot more turmoil come up that we're going to talk to you today. So a couple things that we want to get into is, number one, what's going on with CMS and actual broker override compensation and how that is not resolved and why. We want to talk about the SCAN lawsuit that just got settled with CMS and
congratulations, SCAN. I really mean that.
Seriously.
Congrats.
We want to talk about some of the updates on lawsuits that are going on that, on a high level, just of what we kind of know. And then we want to talk about a concept called Chevron Doctrine and what's going on with a lot of these three-letter government agencies and something called Chevron Deference or Chevron Deference. And again, we're not lawyers. Dan wanted to be an economist or something like that, and I thought for a minute that I wanted to be a lawyer, but I really wanted to argue in court. I didn't want to actually read. Once I found out what lawyers actually did, I wasn't quite as interested.
Glued to a screen all the time?
Yeah, I was like, no, I wanted to be like a Few Good Men lawyer like Tom Cruise, not necessarily...
you wanted to be Harvey Specter on Suits.
Exactly. I was like, what? You guys just read all day and like find... No, that doesn't...
Dude, they're uber geeks.
That doesn't sound fun. Anyway, so let's start into it. Since we had the clarification on the call letter, and for all of you fellow FMOs out there, for all of you uplines, anybody that's getting some sort of override, and even every agent, you should really, really, really care about this because it's going to affect you whether you think it is or not.
I know. My favorite thing over the last month or two has been so many agents being like, I don't get anything from my FMO anyway, so screw them. And I don't care. I just got more money, and I don't even use anything for my FMO. So I've quite enjoyed those remarks over the last few months.
Yeah, so we've been having a lot of carrier conversations since the call letter dropped, and there's been a lot of analysis paralysis. And the update that came after that was things on agent compensation are pretty clear. Nobody's really arguing much ambiguity on agent compensation.
The one thing I would just add overall, though, I will tell you, if I have any regulators or people from CMS or carriers or anybody else listening to this, the overall sentiment from, and I mean probably conversations I've had directly with over 100 different agents spread across multiple states, is that nobody thought that they got a win. Nobody.
Yeah.
I haven't talked to any agents who thinks that the extra $100 up front on the FMV or the $50 back end of FMV and replacing all those other mechanisms of compensation for it, nobody thought they got a win. So I don't know if that was really the intent of everybody, but I don't think that they're not happy about even the $100 or $50 on the back end.
To that point, any regulators, anybody out there that happens to hear this, I'd be willing to talk or challenge the wisdom of this current environment right now that we have going on in the Medicare Advantage and supplement industry for our consumers, the beneficiaries. Because whether you believe this or not, we actually all got into this industry because, yeah, we wanted to be able to make a good living, but we actually love helping the seniors. We love helping other people on the ACA.
We tell all of our agents it's a noble profession.
Yeah.
It's something you can be proud of. It's different. When we talk to agents about the why you do it, it felt good. I had sold crap products before as a salesperson, and the reason that I landed and stuck in the industry was because there's all those seniors you would meet with that had to pick between buying groceries or picking up their prescription. And when you walked away and saved them hundreds of dollars or helped them apply for extra help or did whatever, and they could do both, you felt great, at the end of the day when you made your money, and I slept great at night. And that's why we like the business, and that's why we do what we do.
Make something that's extremely complicated that nobody understands. Nobody understands how Medicare works. Nobody understands even how to get on it. Nobody understands the nuances of it. Same thing with ACA. We brokers and FMOs serve an extremely valuable niche to our most underserved community. And we have this backdrop here where we have the most convoluted, complicated upheaval that we've ever had in the industry, with the backdrop of more uncertainty on the agent and FMO side that needs to fill that gap now more than ever. So I just challenge the wisdom as to what's going on. I really wonder who wins. Who's winning in this? It's certainly not the beneficiary. It's certainly not the carriers.
And the other thing that we'll just say, and I have to be cautious about high phrases, so follow with me in why I say certain things, because if I say certain phrases, then we can't promote this podcast. There's the social platforms won't allow it. And so just understand that there's an important event happening this fall, and candidly, we have been having a lot of discussions about the wisdom of the timing too, of the ANOC letters that are going to go out too this year. And ANOC letters have to go out, and obviously this fall event, will occur later on in the year. And these ANOC letters are going to arrive presumably
6 weeks before that.
And all these beneficiaries who, if you look at people 65 and older, that population really gets out and participates in that activity heavily. Anyways, they are just going to be getting sticker shock like crazy with their ANOCs, and they're going to be upset, and they're going to go shop the market. And again, they're going to be disappointed because a lot of the plans are not going to look as attractive. I mean, huge reduction in benefits.
25% of a reduction in benefits is what we're hearing kind of across the board from carriers, is expect about whatever plans looked like 4 years ago. Roughly, that's what plans are going to go back to looking like.
So that's sticker shock enough to where people are going to shop the market. They're going to be frustrated, and there's going to be some volleying back and forth of placing the blame. And like I said, I just question.
Yeah, and you go, who wins in that scenario? It's certainly not, they're donkeys or elephants,
right?
Who's going to win in these scenarios? But
of course, yeah.
Well,
enough said.
So let's kind of talk about a timeline here. So we had the call letter that dropped, and it's been pending for that. We're 6-7 months into this. We had the clarifications a month, 6 weeks ago, and then an interesting thing happened because the OCR clarification came out, an additional 400 pages, and in there
seemingly out of nowhere, which by the way was exempted for years.
Correct, and all of a sudden we had clarifying language in there that says MAOs, Medicare Advantage organizations, can exempt FMOs and TPMOs specifically from that agent compensation component.
Yep.
So everybody kind of, at least on the FMO and the agency side of things, everybody kind of breathed a sigh of relief and thought, hey, we kind of know where this is landing. Let's go. Well, then, these carriers, we heard a few of the larger carriers kind of banded together and sought out some further clarification from CMS on some things, okay? And that's when things kind of have seemed to go off the rails, because all of a sudden we've heard trickling out rumors throughout the industry of these carriers saying, well, guess what? It sounds like the PMPM, or per dollar amount that FMOs, a fixed dollar amount, is somehow in jeopardy. And one of the things that I even posed this to the devoted guys that we were just with is I wanted to know, where did this come from? Because, you know, according to the CMS call letter, it was pretty clearly exempted that FMOs and TPMOs this was not being applied to us. Correct. Specifically. But yet then it was like, well, let's go search out these answers and see if it actually does. And so my question to a lot of our carrier partners is, well, who went first, or who's actually seeking this clarification? Are your contacts at CMS saying, hey, this is, you know, further down the road, we're looking at this, or are the carriers searching this out and saying, how can we compensate?
Yeah, that's one thing that I have.
We have.
I'm not going to say it on. I'm not going to say it on the podcast. I kind of have information as to the who and the why, but the bigger thing, to your point, that we're talking to, and we had a long conversation with, you know, peers and other FMOs even this week, is the point being, though, is that when CMS, though, gave the mandate, or said, hey, the broker compensation is going to go up by $100 FMV and $50 on the back. Their margins are their margins, right? And so they're already in this environment where their reimbursement rate for next year is not what they expected it to be. They did not get enough of a pay bump to really satisfy everything with technology and labor costs and all these increasing costs. And so they moved the cheese, so to speak, to the broker. And now they're saying, well, that's not our problem. We got to make our margins are our margins. We got to make that up somewhere, right? So I think that really stems them circling back and trying to find a reason to, you know, clarify further.
It's like the renegotiating the status quo type of thing. And that's really kind of, I guess, our question, and some of these, you know, back channel conversations that we're having is interesting to hear who's driving this conversation first, because, you know, according to the actual documentation that's been set out by CMS and then clarified by the OCR, our FMO and agency overrides compensations were exempted from that. So why is there all of a sudden this ambiguity of this need to go re-clarify? Is that being driven by the carriers, or is it CMS going to the carriers on the back channel and saying, hey, you also need to come up with an answer to this?
Well, and the this is that they're saying it's a violation of the anti-kickback statute, which is it fair harbor or safe harbor? I don't know. It's one of those two terms. Don't quote me, because like I said, I'm not an attorney, but essentially what it means is that by them paying us a per dollar amount per sale as an FMO distributor, that violates the anti-kickback laws. And it's like, well, so have we just been violating the anti-kickback laws for
20 years,
decades, and we're now just going to change our mind about it? That's funny. I don't know why now. Interesting. Same with like the Office of Civil Rights, and them having an exemption for insurance carriers to do underwriting, and then saying, just suddenly you're not exempted, and now you do have to follow that.
So the scenario that we have now is you have the rumor being leaked out, hold the phone, FMO and agency override compensation as a fixed per app dollar amount, as it's always been, is up for negotiation. Yep. or up for elimination or restructuring in some way. So a lot of the carriers,
and that's confirmed, by the way. We can honestly tell.
That's not hypothetical, guys.
To agents who are listening, everybody out there, look, I have been having discussions at least for probably 2 hours of my day every day for the past 2 months probably, but I will tell you that it is not an if or it's up in the air. The structure of how carriers are paying FMOs a per dollar app for overrides, it's gone. It is not going to happen no matter what, like how this whole thing shakes out.
I'll disagree a little bit.
Well, hold on.
There's a possibility that it does.
We'll go there. Yeah. That's the grenade, but that could get thrown into
all this. So these are not, again, all of a sudden it's turned, these are not, potential really bad scenarios. These are the realities that we're dealing with right now as of June 5th or 6th, I don't even know what day it is, the 6th of June, 2024. I'm in a time warp. But as of now, that's the pending environment. So what you have is now there's a couple of large private equity groups, everybody knows who they are in our industry, who them and others have filed lawsuits, legal challenges against CMS, essentially saying, hey, hold the phone. You can't do this like this. So what's happened is there's a massive lawsuit filed in Texas right now, and there's another one that just got filed on Monday or Tuesday in Florida.
Yep.
Now,
and just so anybody knows, you can go check it if you want. You can get an account with, it's called Pacer, with the legal system, and you can pay, it's like $30 per search and 10 cents per page a record, and you can find it all. So what we're saying, nothing here is
proprietary.
Nothing that's sensitive, or these filings, are made available.
Public record.
And you can just get them. So FYI.
So now the scenario you have is you have carriers and or CMS having these back channel conversations about compensation for the past month or 6 weeks. And then now you have legal challenges that CMS is getting hit with, saying, you can't do this. This is not your purview. You're overstepping. You're messing things up, filed by massive entities that have a lot of financial backing and a lot of dollars, and other brokerages and other people in the industry, that you're essentially trying to unwind this entire system that's been functioning, well and compliantly for decades, literally decades.
And these PE firms are already invested into other industries and other institutions as well, too.
And if you look at where these lawsuits are filed, they're filed in red states. Where these companies are domiciled, there's not there's no surprise why, right? There's going to be, so now you have this scenario where, like I said, the carriers are going and talking to CMS in these back channel conversations, and every carrier is going to CMS for further clarification. Hey, tell us what you should do. Tell us what's going to be approved. Tell us what is the new rules and regulation. Meanwhile, now CMS is like, well, now we're getting injuncted and sued. And so you have
so both these lawsuits are seeking injunctive relief.
So you have this scenario where nobody can decide, because now it's all gummed up. It's all jammed up. And these poor insurance carriers that actually do have an appetite to grow and want to continue working with brokers and agents are unable to come out with what their plan is or what they should do, because they're being essentially blocked by making these decisions, these business decisions, by what's going on right now. So we have a scenario where
this is uncharted territories, by the way.
Correct.
Like completely in the industry.
Never happened in the industry, never happened at all. And this is all amidst the backdrop of all of the other changes that are hitting the industry as well. So this is just for you all that care about your money, the compensation, the way you get paid, the services that entities like us are able to provide to consumers and agents out in the market.
And a better understanding as to why things would be drastically changing in the future, and you going, wait a minute, this has never happened to me before. How come X or Y or Z? Well, that is because like the entire, like the whole checkers board has just been completely flipped upside down, So.
Yeah, and that's where again we keep asking, where is this being driven from? Is this because if CMS is coming to the carriers and being like, oh, we put out this clarification, but that's not the final rule isn't actually the final rule. We have a secret agenda that we haven't communicated publicly that you have to guess what we mean. That's not how these entities work. That is not the purview of a regulatory body, an entity like that, to be like.
Well, they want plain text, and one of the things that, going back again to the call letter, is that there's some contradictory pieces too in the call letter throughout multiple points. And again, those are some of the things that carriers have gone back to CMS to say, like, hey, you put in writing and contradicted yourself multiple times. So give us clarity and definition and tell us what it is. And so again, you can't even, and we'll talk about the scan lawsuit and like preambles and things like that, where it's a little different than a regulation.
Mm-hmm.
But, honestly, they need to be more specific in what they want and not as vague, and have it be that they're hoping that people guess correctly.
So the environment that we're in right now, carriers and regulators, is that we as an entity, this is the time of year when we're marshaling the troops, we're training agents, we're figuring out strategy for deploying to help the seniors for annual enrollment.
We're trying to get in contact with vendors and marketing companies to be able to advertise, to even help agents send out letters to their clients to help with member retention, for education efforts. We're trying to help them get certified and ready to sell. We're literally on the phone walking agents through websites trying to say, hey, click here. This is how you transfer your AHIP, and this is how you upload that. And
we're trying to teach all the agents what's going on in the industry so they can help their consumers. And already we have pending, carriers are estimating that 90% of Medicare consumers are going to be shopping because of the disruption this fall. And we have a pullback of benefits, so we already know what's happening. And alongside of that, we have a lot of SARs that we already know, service area reductions. So you're going to have millions of Medicare beneficiaries that are significantly impacted and disrupted this upcoming fall. And that's our job. That's the need and the crucial role that we fill as trusted advisors, as brokers, as agents, that we're now in an environment where we can't plan, we can't deploy capital.
Well, we don't know. Here's the thing.
We don't even...
We just have to shake hands with some of these partners and go, we trust that you're going to work it out somehow and pay us. But the real question is, are we going to get paid for these services? And not only are we going to get paid, but then, okay, how are we getting paid? What is the new methodology that you're going to pay us? Because, again, is it going to be forward-looking? Is it going to be rear-looking? Do we get half the money up front? Do we get it later on?
A one-time fee?
Is it going to be spread over like a 24-month period? So for us, we don't have the ability right now to make decisions whether we are hiring more people, whether from a strategic perspective, we just don't know what the economics look like, so we don't know how to deploy capital.
Yeah, so the entire industry is functionally paralyzed right now at a time when we are needed more than ever to solve some and help out with some of the upcoming chaos that's going to enter the market for other market circumstances. So I challenge the wisdom. I challenge who this is benefiting. Supposedly all this is to help consumers, and it's really making it massively, massively worse. So, that's where we're at with our...
And by the way, brokers are supposed to be educating themselves on the Inflation Reduction Act too right now, and going to be having to explain all that with Part D to their beneficiaries this fall as well.
Costs are going up, brokers are needed, and we have all this uncertainty, fear, uncertainty, and doubt rampant in the entire industry right now. The one good thing I'll say, we have phenomenal partners. Our partners out in the insurance industry, a lot of them have reached out and are like, hey, no matter what it looks like, we're going to take care of you guys, right? We're going to figure out a way to make this work. You serve a valuable need. The carriers, for the most part, and I'm not going to say all carriers because all carriers don't know this, but most carriers realize brokers are invaluable and serve a need that is that they're unable to serve effectively and cost efficiently themselves. And we're just setting this environment up where we're going to massively disrupt this very well-oiled distribution model that we've had for a long time, and it might take years.
Well, and it took 20 to 30 years to build this very good, sophisticated channel. And boy, that's the other thing, if there's any regulators or people from HHS who are listening to this, is that, again, look at how messy the marketplace is right now on ACA, and look at where ACA and all the fraud and all the challenges that are going on right now, and you look at Medicare, it's more sophisticated and it's been around for a longer period of time. We've gone through all this pain and we've evolved to get to this stage, and then to say, let's just blow it all up.
Hit the reset button,
Yeah. Oh.
So here's what I think is going to happen is I think that the situation is FUBAR. If you know the World War II FUBAR acronym. And I don't think that it's going to be resolved consistently. And so all these carriers, it's going to be a choose your own adventure model where they're all going to have to consult with their legal teams, understand the cluster that I just talked about, and then deploy whatever market strategy for brokers and FMOs that they want. And you're going to see that ranging all over the place. Guess what, carriers? We already have some carriers who have said, we're just going to do it like we've always done, which is per app, per member, per month. Here's some co-op dollars. In no way, shape, or form can those dollars make it down to an agent to bias influence one way or the other.
And
Sign
then
that.
And they more specifically list out the services provided.
Correct.
And such.
Done. End of story. So it's going to be all over the place.
Well, and that's the whole, well, two things I would say to agents listening to. The one thing I will say, because I've had agents ask me, guess what? We're not going out of business. We're not going anywhere. If you can't tell, I love this stuff. Mike and I both do, but we read up on it. I mean, when most people are probably watching Netflix, we're just absorbing and reading and consuming this stuff because we're geeks and we love it. So if you're feeling uncertain about everything happening right now, just know it's like with the the GameStop. What was it? Something Kitty? The
Roaring Kitty.
Roaring Kitty, dude. We're gonna be like Roaring Kitty, and we're just gonna keep pumping out these episodes all the time, and I'll be very publicly facing about everything going on, and we're not going anywhere. So I will say that, you know, we're here for it. Like all this stuff that's happening and all this turmoil, we actually are positioned, I think, very well to continue to succeed in these rough and turbulent times. But I will say that there's a lot of agents who are just not aligned somewhere where they're getting clear direction or a lot of guidance. And that's one of our big commitments to the agent marketplace and to our carrier partners, is that we are going to be here to kind of disseminate that information and make sure that you're updated and know what's going on.
Yeah, and one more challenge that I'd issue out to agents and agency owners and fellow FMOs out there: if you can have a voice, lead out, right? Our industry needs leadership, and one thing that I'm asking for, that I'm asking carriers, is who's advocating for agents and FMOs right now. We know how complicated Medicare is. Most of our seniors, they don't know how Medicare works. They don't know how to get on a plan. They don't even know how to activate Medicare to begin with, let alone knowing what Medicare Part A, Part B, Part C, Part D is, MOOP, all this stuff. We serve a super crucial segment of the population, and a lot of times it's the most vulnerable in our society. The duals, the people who are on Medicare and Medicaid, all these people who are medically disabled.
Even basic stuff like whether their Medicare Part B starts automatic or not depends on whether they're drawing Social Security. Yeah. Most people, it's a very basic thing that most people don't know.
What I'm saying is people don't understand that. And we serve a valuable purpose. And so please advocate for yourselves, advocate for your agents, advocate for your downlines, your distribution, your channel, because guess what? We are extremely valuable in the marketplace. We are the experts in our field. We know what's going on. We know these products. We know these carriers, and we love our consumers and we want to help them. But we need to be empowered and we need to have some clarity so we can do so.
Yep. So where are we going from the
Let's go to scan lawsuit. FUBAR.
So the one other thought that I had as you were talking that I wanted to mention too, and this is like what I actually made a comment on LinkedIn just today when we were on the plane, was that, again, going back to these carriers are all in different situations right now and have different interpretations and are going to take a different path. I think the industry in general, like when I say like the industry from CMS to carriers to agents and agencies and FMOs, they would like to see like a big carrier lead from the front and say, this is how we're dealing with it. And they would love to see all the other carriers just kind of fall in line and follow that same methodology to establish kind of a standard practice. Mm-hmm. But the reality is I don't think that's going to happen, because some of these carriers want to grow and are in a place where they, in this funding environment, can sustain the growth or have the balance sheet for it. There's other carriers who do not. So you have misalignment in objectives and goals from some of the different carrier partners right now, or from the carriers. And so that's why they're not going to be aligned with their strategy. And so you're going to have carriers who go to FMOs and have very different compensation models that they create. And then FMOs are going to act accordingly, as will agents and all their distributions or their W-2s or their LOAs or their shops or whatever they have. And so it doesn't matter, because then it all goes back to square one. That, what did it solve? Because then they're just going to be financially incentivized to behave a certain way. And guess what? Joke's on you. You curbed and changed nothing.
Yeah, and again, show me your comp plan. I'll show you the behavior. Yeah. Whatever you change it to, that where the money goes, attention flows. That's what the new thing's going to be.
It is.
So is that the the issue that you're trying to solve. And like Dan's saying, you're going to see one carrier interpret things and come out with something over here, one all the way over here. And every year, the next 2 or 3 years, they'll start, making some changes, and we'll meet kind of back in the middle with some sort of new way of doing things, agreed upon standard model. So it's just real chaotic. So, maybe you can lead out. I think our industry did, to this point. We're all rooting for the carriers. Scan beat CMS in the Medicare Advantage
before we go
lawsuit.
there, just know too that it's public, right? It's Scalia in Texas that's has that suit, and he's also I know he sued the government 14 times and he's won every time. So based on that record and that it's filed in Texas, I'm going to come out here and be pretty optimistic and say I think there's a good chance that he wins. So,
yeah, we all know where this leads. It's chaos. It's chaos for the sake of chaos,
right?
For no apparent reason, with no apparent winners.
But then I'm also going to say, the scan lawsuit, which we're going to talk about now. If you start stacking the scan, and then if the Texas case and the Florida case, and they all go out against CMS, and now you have multiple lawsuits that are all winners, that's where I said, like, at what point is it malfeasance too of people in charge of HHS? And, how are you so out of touch that you don't even understand what things you can and can't do?
Well, we'll bring that home when we talk about Chevron.
Yeah.
So
we got to talk about 2 topics before we wrap. And the first one's the scan lawsuit. And so the scan lawsuit, it was finalized, right? Just June 3rd, 3 days ago.
Yeah, June 3rd. 3
days ago. And essentially what it was for those, listening is it was really over stars. And and the whole premise, they always change the methodology on how they do stars every year, but they made some really significant ones back in 2022 on the methodology and how they actually pay and do the reimbursement rates for carriers. And so SCAN had previously been at about 4.5 stars, across their plans that they have in California, Nevada, Arizona, Texas. Did I miss any states? There's about 4 or 5 states where they're at. But essentially, they were 4.5 stars. And with there were 2 new kind of principles that CMS introduced in like the stars ratings. Okay. And so for those of you who are like the basics, it's out of 5 stars, right? Meaning that 3 is kind of like average, okay, not great, 3.5, and they go in half-star increments up to 5 stars, right? Mm-hmm. And anything as a broker, if it's 3 or below, you're like, especially like 2, it's like low performing plan, terrible.
Up for SEP, or they'll get eliminated if they don't get the ratings up.
They have so much time to get back on track and perform better before they're actually like eliminated and forced to SAR or sunset. So anyways, but half-star increments, and obviously the better the star rating, the more funding that you get, right? They want to incentivize quality. And so every year they change the methodology. They introduced these 2 principles. One was called the Tukey outliers.
And that's TUKEY, not like number Tukey.
Yeah, so. Tukey outliers. And then the other one was called the guardrails, right? Mm-hmm. And so and if they're implemented together, everybody agreed that it would be okay. And what the Tukey really does is the way that CMS scores these health plans is they cluster plans in this cluster methodology, and they have these cut rates. So meaning at these certain and they grade almost like if you're a student in a class, and if you read the docket,
on a curve. Mm-hmm.
They grade on a curve. And so what the Tukey outlier does is says, hey, we're going to like eliminate those couple of like outliers that are, and it's usually like low outliers, not the high performing. They're not taking away the really good plans that are incredibly high performing to penalize carriers. They're taking away the couple of outliers on the bottom, usually with this Tukey outlier principle. So they're removing those numbers because what they're trying to do is establish like means and average numbers. If we go back to
standards of performance.
So if I go back to like 5th grade math, a mean, they're trying to establish those, and they're helping or giving the carriers the benefit of removing those couple of outliers. And then at the same time, they are trying to have this guardrail principle in there to where for any of these non-CAPS measures, they can only go up or down by 5% each year to kind of have a little more stabilization. So all the carriers were okay with that. And what they'd have is they have these cut thresholds too, where they would say, hey, the carriers that landed here are in this 3-star criteria. The carriers that landed here on the curve, so to speak.
That's the line in the sand where if you're above this or below this.
Yeah. Yep. And so if you're above this, you're at 3.5 stars. If you're above that, you're at 4 stars. And so that's kind of the methodology. If I had a whiteboard, maybe I'll whiteboard it out and kind of show you on a whiteboard. But essentially, SCAN's lawsuit, which was successful, was that they only implemented one of those measures and not the other, because they were supposed to do both of them at the same time. And so
the guardrails and the 2 key outlier principle
together, and they didn't. And so what happened is SCAN was improperly penalized and was dropped below that cut rate threshold to 3.5 stars. And they would have been 4. To clarify, they would have been 4 stars. But that's one of the biggest funding jumps in Medicare Advantage for you all, to go from 3.5 stars to 4.
It's significant
because there's double bonus counties with star ratings, like in a lot of these areas. So that bonus amount from going from 3.5 to 4 is almost like is doubled or multiplied, right? Yeah. And so that's why it was such a significant amount. And so that's the crux of it is CMS basically came back and said, well, hey, we put some of that information in our preamble. And SCAN is like, no, like you have to be it's your own language. Like you have to be plain and specific and very much in writing. This was not in like the regulation that you were going to be basically evaluating us with only one of these and not both. And so because of that, they were like, well, yeah, but we told you. And it's like, no, it wasn't even in plain writing. So the result was they lost.
Yep. So SCAN got $250 million settlement.
Was it $956 per member or something like that?
I can't remember
It was $900 and something per member that they got paid, because that would have been the difference if they had been properly given the star rating. So that's what the result was. Is good job. About $250 million for SCAN. $250 million is the number.
Well, the important thing is all the other carriers are licking their chops about that, because it's going to affect other people. In fact, Elevance and our friends at Zing have already filed lawsuits as well for very similar situations and being dinged. So there's going to be more settlements.
So I think what a lot of the carriers are doing right now is evaluating and saying, hey, let's look at that methodology. And were we impacted in the same way? And were we also given, I think if the answer is yes, and their analysts go through and decide that, they had been dropped below that cut threshold, then they're going to also follow suit. And there's now precedence that has been set, right? So, I mean, that just turns into like a laydown, in my opinion.
Yeah. So again, another CMS, lack of clarification or implementation of rules and regulations that have caused some ambiguity, that have not been clear, that are now getting clarified in a court. So I think we should probably wrap. Do you want to talk about
Chevron
really and kind of like...
Yeah, and so anyways, the SCAN thing is, the last thing to bring up about the SCAN is there is a question now with the carriers about the refiling, because they're also concerned about the methodology now, and some of the carriers that filed for plan year 2025 are now a little concerned that they might have to refile again and have their star ratings completely redone because of that. So they may not have to reopen back up for the bids, correct?
Yeah, and then you have the average bid amount issue changes that we talked about on the last process or on the last podcast and this. So yeah, the carriers are working overtime to try to make sure they get their plans out, and that I'll just say someone's going to come out and someone's going to be a big winner and someone's going to be a big loser with how much chaos is there. Somebody that may not even want to win big might accidentally win big just because of the way it's so chaotic right now.
Yep. So anyways, that's enough on the SCAN lawsuit. The last thing we talked about is like this thing called the Chevron Doctrine, and I'll give props credit where it's due. The first person I had a conversation with was Nick, Kingdom Group. We were having a chat, about it, and anyways, he really kind of got me onto this, and since then I've been spending a lot of time, researching this. But anyways, But really the premise of it is, and it's not just related to HHS, the Chevron Doctrine, pretty much what it is our legal, like
goes back to a court case in 1984.
Yes.
With Chevron, the gas oil company.
So 1984.
So yes,
for 4 decades.
40 years old now.
Yeah, we've been using this doctrine, and essentially at the crux of it is the 3-letter agencies, and pick your 3-letter agency, the EPA, the FBI, any 3-letter government agency, HHS. Really, they don't make
any
laws.
regulatory agency.
Yeah, They don't make the laws, right? They don't create laws. We have a legislative process for that. We have lawmakers.
Yeah, just a reminder for everybody. We are a democratic republic. We do introduce bills that are debated in Congress.
We're a constitutional republic.
Yeah, and we become we have a process for how you do make bills and how laws are elected
created.
Officials for creating these laws.
Yes.
We don't just have unelected bureaucrats that decide anything and everything.
Yeah, and so the whole point is like we have this whole balance of power within our government system. And, we have lawmakers for a reason, and essentially they make laws. And then the Chevron Doctrine, what it really did is it dictated and said, hey, we're going to allow these 3-letter, like the government agencies in order to kind of interpret these and then make regulations and enforce them, right? And so...
Yeah, anywhere where there's ambiguity from
Correct.
the actual law, that then it says that the deference or deference, whatever you want to call, they'll defer to that regulatory entity to clarify.
To kind of, because they know better, because it's like their job
Correct.
or their purview to do so, right?
If there's any narrow gray area.
Yep.
That's what the doctrine says. That's what that Supreme Court case said, was that it'll allow those 3-letter regulatory entities to make clarifying details and decisions regarding policy.
Yeah, so in our industry, we're specifically talking about, like, in theory, we're talking about health and human services, and they're making these regulations.
CMS and OCR.
And the OCR and CMS. And so essentially the question is with even a call letter and things, do they, at the core of this is, do they actually have the authority and the ability to go as broad as they have and as aggressive in how many of these regulations they've made, because depending on what happens, and apparently the Supreme Court is hearing oral arguments on the Chevron Doctrine, and I am hearing that supposedly we're going to be in the next 6 to 8 weeks maybe hearing something back from the Supreme Court.
Yeah, and what they're looking at is, number one, is the Chevron Doctrine even good law? Right? Is that even constitutional? Even though we've been doing it for 40 years, we've seen, Supreme Court go back and revisit stuff as it's been and make changes, right? I mean, stuff that's been like, look at the abortion law.
Yep.
So you have the Supreme Court that's looking at it. Number one, is it even good legal grounds? Is Chevron deference even good policy? Because they may just say, no, it's not. That's not how our country's designed.
Well, there's going to be 3 outcomes from it, right? One of 3 choices. One is, they hear it and it stays intact exactly as is, right? Which I think is the least likely of all of them. Second, the other one is that they go, hey, we are going to allow it to stay, but we're going to give a lot more definition as to what they can do and have it be more narrow, versus it just seems like over time, 10, 20, 30, 40 years, it just got off the rails to where these regulatory bodies could just make up rules that very much impact business, right?
Yeah, and it's not just our industry, guys. It's not just the industries that the entities that we're talking about. These types of regulations are affecting all of these other industries.
Sometimes they'll make a rule and it's crippling for a business, and when you're a business owner or an investor or anything else and you're deploying capital and going one direction, and then suddenly a new just regulation comes out of nowhere, it's crippling for a business. And I think that's against what you'd call like the American entrepreneurial spirit. Right?
Correct. And, in theory, Dan and I are very much libertarian minded, where it's like, hey, we want our government to pass laws like the legislative process is supposed to. And if we want to go back and say, for example, if we want to have Congress debate the merits of broker compensation and FMO compensation and things like that, and have a chance to our elected officials that represent we the people to decide on these things, and we pass laws, then that's fine.
That can be our fate.
Correct. Yeah. But then, but when it's all of these things are being kicked down to these regulatory entities, and you have unelected bureaucrats that are making policies that are swaying and changing these industries in massive ways. In my opinion, that's not how our country is designed to work and not function.
It wasn't intended to function that way.
So, and it's one of those things where the creep just grows till we have the way that it is right now. And so we have a couple of things to summarize.
Yeah, and so I think the third outcome is that they might just say, yeah, this is not good doctrine, and we're going to throw it out completely. And then, of course, if that does happen, there is a litany of lawsuits, just again over the last 40 years that would just be lined up at the doorstep, just waiting to be filed for, damages.
But essentially it would deleverage or take back some of the power of these 3-letter regulatory entities to essentially dictate policies without going through the full process of becoming a bill.
Well, and I think that part of it is that, look, if you look back, 10, 20, 30, 40 years ago, and the number of bills that are passed, it's just increasing numbers, like it's crazy, the number of bills that are passed. And it just means that you can't move things and change things as quickly, right? So if you have to go back to a legislative process where a bill has to be presented, it has to go through committee. Most bills never even make it out of committee, to be honest with you. But to actually get sponsored, to pass committee, to even get voted upon, and then be actually going into effect, I mean, that takes a long time. And so, again...
That's hard. So it's easier to just say, hey, Bobby, I elected you to that. Go make this happen, in your entity.
Exactly. And so I think but it gives more stability, and, obviously, and things do, there's pros and cons of that, right? But I mean, I think that's the intention of the process. So anyways, that's one of the things that, again, I had posed the question and have asked people about this because I'm not an attorney, but the way I'm looking at it, and I have read some of the preliminary comments from some of the justices, and it seems like a lot of them are inclined to rule against the Chevron Doctrine. From what I'm Google, this is just me being on Google and reading,
Us
all these
being Google lawyers.
Exactly.
Yeah.
So, my legal advice is as good as I just told you. So
yeah. So to bring it all home, Dan said this is happening. It is happening. I think it's happening, for now. Because you have legal challenges going up against CMS in this compensation situation. You have a fundamental Supreme Court case that could upset the apple cart on a massive way with the Chevron ruling. But my question for this, to bring it all home, is who wins out of all this? You have a lot of chaos. Certainly our Medicare beneficiaries are not winning. Like Dan said, this fall, seniors are going to get ANOCs. There's no annual notice of change coming, and there's going to be massive upheaval, and the plans are going to get worse. If you're in a party that is participating in the big event this fall, you certainly are not going to view that as a win when you have a lot of angry seniors that are motivated to go out and be like, things suck, my plan's getting worse, what the hell's going on?
I want to behave based on my dollars and things that affect my lifestyle.
Yeah, and just knowing what I know about our system, I go, where's the wisdom in this? Because you have a party in control that could seemingly, you would think they would want to construe the environment to be as advantageous as possible and as least friction as possible. But that doesn't seem to be the issue here, or seem to be the case here. And I go, who wins in this? It's not the carriers, unless the carriers specifically don't want to grow, which we know there are carriers that, but I think there's going to be a scenario for some of these carriers where it's a cut off your nose to spite your face type of thing,
right? Where
it's very short-sighted to go, yeah, let's reshape things and let's cut some of these things off, only to have to rebuild that. It's very short-sighted to say, hey, here's a channel that we've created and a very sophisticated distribution model for the past 25 years that we've built and created. And because we're in a 3-year short squeeze on the reimbursement environment, we're going to
because of some headwinds on the reimbursement for the next 3 years, we're going to completely blow up that whole channel it's just folly. It's such a bad idea. And candidly, not only that, if you keep doing it, the only people who win are going to be the large institutions. And I mean from the payer or the carrier to, even on the sales side, like you're talking the e-telebrokers, the big syndicated institutions that have a lot of financial backing, the ones that have the ability to have an employed agent model or a captive agent model, they're the ones that are going to win in all this. You know what I mean? And so you're going to have more and more sales being done by the people that, we all have pegged as the bad actors in the industry. And so all these things that are happening that we discuss on this podcast today and previous episodes, is that all of this, the call letter, the legal chat, everything, it's all going to harm the little guy, the independent agent, and then
the small carriers,
and
the consumers.
And there's going to be less choice for consumers ultimately, more consolidation, and you're going to have more and more of the overall business being written by these bad actors.
Yeah.
So, I mean, how is that all the carriers that I've talked to behind closed doors, they see it and they know it too. And they go, we're already struggling with bad LTVs, and all these accretion rates and these metrics because so much more of this business is being written by these large entities. And now if you start just hammering the independent agents who are going out and driving in their car and meeting at the kitchen table with, somebody and holding their hand and providing a lot of value in the community, and less of those enrollment activities are occurring, and you have more of these large institutions doing the enrollments, then it's going to continue to drive down the quality.
Correct. So what you're having is you're eliminating these 10, 20-year brokers that have massive experience and value in the industry, and you're replacing them with scabs, essentially. You're going to go out and you're going to hire an unskilled, unexperienced labor force like we've seen when all these carriers, you're going to go back to hiring direct agents. The cost to hire and train and the caliber and quality of that agent is going to be massively lower than what a skilled, sophisticated, independent agent that's been operating in the marketplace for years is. Yep. And that's a fact. That's a fact. We see it all the time. We see people getting into the industry, and that's a good way to start out, but that is not the good caliber quality experience that's serving our senior population right now.
Yep.
And all this applies on the ACA side of things, by the way, which we can get into. But
not today.
Yeah, lots of stuff. We'd be open. Anybody that wants to have a conversation, we're having some really cool conversations with people, regulatory entities. We didn't even get into some of the other chaos with some of our advocacy groups and things like that. There's lots of stuff going on. Hopefully you all find this information valuable. We'd love to hear more feedback in the comments. Share this, podcast far and wide.
Like and subscribe.
We're seeing rapid growth right now with the podcast, and if you want us to keep doing that's the fuel, is just give us a like or a comment every once in a while as a reward for if anything's valuable for you.
Yep. Any last thoughts before we wrap?
No, I mean, like you said, I ultimately think we as an agency are going to win. It's going to be a bit chaotic. I just think we're in an environment where it's chaos for the sake of chaos.
Well, and here's the other thing is I look around, if you're an agent listening, you know what I'm talking about. There's not very many engaged leaders that are engaged, who take the time to understand what's happening, who are going to be proactive in a strategy to navigate all this chaos and essentially guide their organization to a win. I just think that a lot of these organizations right now and these leaders in the space are kind of just sitting back and going, I'm part of this organization, so
head in the sand.
They'll figure it out for me and I don't have to worry about it. And so I just think that there's just very few people wanting to get through all this chaos. And so I just think, in all that, to your point, I think we are going to very much win and come out ahead, but not before having to run through a couple of brick walls over the next 6 to 12
Final
months.
thoughts, because I know a lot of these agents, and there's that meme that you see where I think it was ultimately about, Germany in World War II, where it's like when they came for the so-and-so, I said nothing. Yeah. And then they came for the next group of people, and I said nothing. And they came for the next group, and I said nothing. And then they came for me, and there was no one left to stand for me or advocate for me.
That's how it is.
And that's where we're at. And that's where agents are at.
And it's fitting, as I was sitting there in the Holocaust, memorial, in Boston last night. You know what I mean?
Yeah, and not to make analogies of what's going on, with the industry to that, but that's that concept of you have to stand and advocate for yourself. And you agents that are kind of like, well, this doesn't sound like it affects me. I promise you, if FMOs and some of this distribution gets unwound, it's not going to be too long before you don't have the career and the opportunity to serve our beneficiaries like it's been. So you need to be out there. You need to be advocating. You need to be engaged, and you need to be encouraging leadership and speaking out against and again, advocating for yourself, being a damn good agent, and providing value to your consumers. That's how we win.
All right. Catch y'all next week.